Hey guys, this is a market update. In this video, a bunch of different data points for you as to why the bears seemingly cannot force us lower right now. Despite all of the FUD, we've had Binance getting sued, Coinbase getting a Wells notice, Kraken going through a settlement, not to mention basically the entire crypto industry just getting choked off by the US government right now. Why is it not forcing us lower? What is happening right here? Why is any weakness in price just getting met with bids and more buying pressure up into this 30K resistance? I think it's the macro. I've got all the data for you in this video. Coming to the Bitcoin price initially though, I want to compare and contrast the price action we're seeing right now as to what happened in the bear market. 30K is also the very key level for me where there isn't anyone that can say that we're still in some sort of bear market or that we're in a bear market rally. Once you break through 30K, that for me is the level where you are just entering a new territory for the market. So you can see during the bear market, a bear market is lower highs, lower lows, just getting sold off. Any rallies met with more selling and just the destruction of the market price coming down. And that happened throughout the whole bear market. This right here is completely different. This now is bullish price action where you're getting rallies, then you're getting a test of support and more rallies from that. So you get a rally, a consolidation and a sell-off, another rally, and then you get getting a consolidation here. Now, I know many traders are looking for 25,000, 25,000. You can see right here, this support and resistance level as a pullback where they actually want to go long again. So they're looking to long further at 24, 25. And so the psychology of the market here is, well, there are so many buyers at 24, 25, maybe I'll just start buying a little bit higher. And then a few days of weak price action is met today with more buying. And so I think it's the macro that has completely changed and is forcing us higher. And at this point in time, we are just going through an uptrend. And so you're meeting resistance at 30. Buyers are not going to get 24, 25. They're going to have to pay a little bit higher. And then suddenly, because of the bullish price action, people feel like they haven't got enough. They start buying again. That's where you start getting the breakthroughs of 30. So this could be a very key level that we trade under for many months as the data comes out. But for right now, this for me is bullish price action, and the break of 30 would confirm that the bear market is over and we're going into new market structure. If you are a trader, get a deposit bonus on Bybit via the link in description. You can make a deposit and get a deposit bonus up to $4,000. You can check the details via that link. So let's look at the fundamentals and the macro as to why the market has completely changed, in my opinion. And you have to take away all of that inflation stuff. That's gone. So let's look at the fundamentals here. Bitcoin active addresses in this bear market. This is such a bullish chart. So take away the price, just look at the Bitcoin active addresses. This network is growing. So this network is a growth asset. That's very important in terms of thinking about the macro cycle and the Bitcoin cycle. Bitcoin is a growing network. Growing networks create more value over time. And so as long as Bitcoin active addresses are going upwards with highs and lows, then that's good for me. And then we just have to time the macro as to where we can trade. This is from Charlie Bellello. I'll leave this article in the description because it has a bunch of charts that we can see. So the Fed fighting inflation, raising interest rates, that's not going to be the case over the next 6 to 12 months. Here we see that the Fed funds rate is 4.75% and core PCE is 4.71. As core PCE goes below the Fed funds rate, that's good news, right? Core PCE is really what the Fed are looking at, core PCE and wages. And you can see that the Fed funds is now above core PCE. It's very important because Fed funds always just rise up to meet core PCE and they follow it back down again when the recession comes. So this is essentially the top. It's the top for rates in my opinion. The tightening has occurred and it's done its job. It broke the banking system and we're going into a different stage of the cycle right now where we're thinking the Fed is actually going to have to start pausing and easing. And that's good for tech and Bitcoin and crypto. Maybe not great for the stock market in general if you're a Dow Jones component or something, but that's not Bitcoin. It's going to react very differently to that. As we can see, US rents as well coming way down. This is apartment list. The shelter is part of the CPI. It's the most lagging indicator. It takes up so much of the CPI. You can see how lagging it is. Eventually this will turn as well. So that's not going to be adding to CPI. in the next 6 to 12 months. As we can see here, producer price index as well, well off the highs, coming down here. Anecdotally as well, I saw the Levi's CEO come out yesterday, and he said essentially the supply chain has no issues at this point. It's exactly like it was before the pandemic. In fact, they're going through a stage of heavy discounts right now. Over the last few years, they've had a lot of pricing power, and now they, what he says discounts is essentially no one's buying our stuff, so we're going to have to flog it at a cheaper price. That's not inflationary. The cycle has turned. Everything anecdotally, every data point is different in terms of when it turns, but the narrative very, very different now as to what it was. Also, as you can see here, the Fed pumping money into the markets. So this was obviously quantitative tightening that occurred, and then the banking crisis here, more liquidity into the banking system. Now that benefits Bitcoin specifically, and crypto as well, because they have a lot of correlation to Bitcoin. But as liquidity rises, Bitcoin usually, some of that money finds its way into BTC from hedge funds and traders that are speculating on a turn in policy. So it's important, just want to get across the turn in policy and the turn in macro that's occurring right here. Again, leading economic indicators, you can see them here absolutely crashed. This is a very good indicator of where GDP is going to go. And as you can see, each time they come down below the zero level, we get a recession. And of course, it's not going to be any different. We're going to get one maybe mid to late this year, maybe later on this year, potentially into 2024. But everyone's looking at that now, and especially with the banking crisis, the macro narrative is turning into things are going to get much worse. The Fed's done its job at this point, and so a pause is very potentially likely at the next meeting, which actually isn't quite far away. We can see here as well, this is the yield curve. So we have the 10 3-month yield curve and the 10 2-year yield curve, both of them here. And each time they invert, most of the time you get a recession. Not every single time, but as you can see, they actually invert way before an official recession hits. So we get this in the 1990s, get this in the 2000 and 2008. Again, just during the pandemic here, and then this period right now. But the important thing is for Bitcoin and crypto is that they actually recover, or the inversion goes away and the yield curve steepens before the recession. So each recession, you can't really see it on this chart, but this gray area here, the yield curve steepens again way before a recession, and that's the market and the bond market pricing that in before it actually happens. And so once the recession is here, what you're going to be seeing is interest rates way lower than they are now. Now, interest rates lower, potentially the Fed stepping in as it has done with not QE this time with the the money that they've given the banks, buying all of their bonds at par. That pushes yields down. That means easing. That is potentially going to get priced in over the next few months, and that's good for BTC pricing in that turn as well. So the macro for me basically is turning now. Over the last 6 months or so, that's what I believe the Bitcoin price was trying to price in during the bottom, but the very large markets are now pricing in this turn as well, whereas before they weren't. So I do think the macro is turning very significantly. And as you can see here, the FedWatch tool, the market has a 55% probability that they won't raise at all at the next meeting. The next meeting isn't until May, 3rd of May. So it's quite a while away. So we've got a long period here where the economic data could start to fall off potentially. We just don't know what's going to go on with that. But the market for right now is pricing a slight probability that there will actually be no raises. So the Fed will pause at that meeting. We obviously don't know what will happen. There's a fair probability that they may raise another 25 basis points. It really is going to be dictated on if there are any more bank failures, or if we kind of get through that. So the macro and the market are saying we're kind of at the end now, right? Maybe one more rate hike, maybe not, maybe a pause, and then we know what comes after a pause. The median time frame from pause to cut is around 6 months. So that's something the market price is in way before it actually happens, which it is, in my opinion, starting to happen now. China is also flooding their market with liquidity, which is supportive of risk assets. China, last time they did this, you can see Bitcoin went from around 15 to 23,000. They're just doing it on and off at the moment, trying to support liquidity, but they are back in growth mode. Hong Kong opening to crypto, essentially open for business, is very important news as well. They've obviously got the okay from Beijing to do that. So that's a big economy that is supporting crypto investment, which is very, very bullish news for all of the crypto industry, despite what's going on in the States, which is a mess, but it's going to get sorted out because they have to compete. This is too important. So as for BTC, the macro has completely changed. The liquidity picture has completely changed. The narrative has completely changed from the Fed must destroy everything to the Fed destroyed everything and they need to sort it out. Now, that's what I believe is going to support Bitcoin over the short term. When the recession hits, maybe there'll be some growth scares and everything like that again, but we know governments are going to step in to try and support that. The first thing that will react every time is crypto, as it's so closely tied to rates and liquidity. So that's where I see things. It's going to be very volatile going through that recession. But this, for me, is no longer a bear market when you have price action like this. And let's see if we can break through 30K. If you are a trader, go to Bybit, check the link in the description to a deposit bonus up to $4,000. I'm James with Money's GG. Cheers for watching, and I'll see you in the next one.